Hello everyone, I hope you are doing well. So let's start the weekly review for this week, so May 22 to May 26. As you can see, strategy has been pretty the same for all the week, but slight differences, because some trades were counter trade, you will see. And also, I will talk about the importance of trying to trade effortlessly, and you will see on Friday, because the setup was not easy to grasp, and you could take many losses on the 1 minute, but if you stay with your strategy on the 5 minute, it was pretty easy to catch. So it's not always good, to go into the 1 minute and trade from it. Sometimes you just have to adapt and take the time frame which fits the most, to your plan. So let's start on the Monday, okay? So let's start on the 15-minute chart, okay? We have a breaker, which is a discount area, and we want to pull back into this, okay? Point number 2, trading from the right place, So we want to buy from there. We don't want to buy from there. And especially because you see from low to high, we made a break of structure, so stop losses may be sitting there, okay? Now, on the 1 minute, you can see that we have taken the stop losses during London Open, okay? We have left many unmitigated OBs, so this is like a kind of confluence that we are in the right plan, right scenario. So now, for me, the buy side liquidity is above, okay? And what now that we have the TP area, we have the right place, you remember 15-minute breaker? Now we want a shift in market structure. So we have this candle, which takes the liquidity. We have a first push, but this is not enough for me to trade. So I will wait for, a second break. Boom. We have the second break. Now, you could be tempted to enter from there because there are many fair value gaps. And in this case, I take the FIBO low to high. 15% was kind of there. So I would trade something below this week. Okay. You could snipe from there, or you could snipe if you want the order block. Or you could wait because you see there are free push on odd low for value gap forming. And this is, the most powerful shift of the market structure, which you can see on my YouTube educational videos, because you have kind of, a range with two unmitigated OBs, and this one broke the structure, took the liquidity, we retest, red candle, and fair value gap, you trade from the fair value gap, boom. Or you have another type of entry, which is a breaker, because this order block hasn't been retested. We just went through it. So it counts as an old high. We break, close, and you see, this is very hard to see. Like, you must train your eyes, to see these little wicks. And you see this little wick retest the breaker, which means probably that it won't be retesting those two fair value gaps. If you are waiting for those two fair value gaps for an entry, you will miss, okay? because now this candle took the money from the old high, and you could trade from this candle if you want, or from this fair value gap. And it continues, and you take your profits. So whatever TP you take, you must have at least 20 pips, okay, of profits. So this was Monday. Now Tuesday on the daily. So I expected price to continue. So this was Monday. Or this was Monday. No, this was Monday. And with this candle, I expected the price, some people would expect the price to reach this order block, but we already mitigated this order block with this little wick, you see? That's why it's very important to watch every candle, because people will wait for this order block to be mitigated, but it has already been mitigated with, this was Thursday maybe, and I remember I took this trade, last week. So you must be very careful with what the candles are doing. So I expected the price to continue down, because there is an area below this daily candle, a 4-hour or daily fair value gap, which needs to be mitigated. And so this area, I have it since like middle March, So I've been waiting for this since 3 months now. So I expected the price to continue down. And so what was happening? This is the hourly chart, okay? Respecting the fair value gap, you have a little fair value gap right there. Even though the wick goes above, the body still respect the fair value gap. Okay, so we just took some buy-side liquidity. We come back, we close below the fair value gap, and we continue down. Okay, so this was kind of, the scenario. We induce people to sell, in Asia, we have accumulating sales. So even though our bias is sell, we should not sell right away, because you see, continue to sell, induce people, boom, we take the stop loss, and now you can sell, okay? Now you can sell, and you see there are many unmitigated order blocks, okay? And this one, I took this one live, I remember, because I took TP1 from somewhere there and TP2 right there. So you see there were beautiful fair value gap inside this area. Look at this. When you see such a beautiful fair value gap, which creates displacement because it broke the structure, and it is left unmitigated, and you have equal highs, it all indicates that it will come there. And when it mitigates there, then you can sell, And yeah, this one was kind of tricky because it went down very fast at London Open, and then we have retraced, it took like 3 hours, 2 hours, something like this, to retrace, take the liquidity. I call this support and resistance liquidity because we take the liquidity, boom, we break, we come retest the breaker. And once we retest the breaker and break the structure, then it becomes, this high becomes liquidity inducement trap, okay? So this become the liquidity point to target. So you could buy, but since my bias was sell, I prefer to wait, because you see, let's say you buy from there, boom, they take your stop loss, you know. Let's say you snipe the buy from there, you come back to break even. You know, it's tricky when you trade in the wrong direction, I would say. Even though the liquidity was there to be taken, you must be 100% sure that you are at the right place, you know. So yeah, the entry, I consider this as an intermediate term high, because this one would be like a short-term high. And we made for value gap. So I traded from the first one. It took the liquidity of people trying to sell from this little order block. Okay. Kind of made a, you know, in the 1 minute, the price action can be very tricky. So you must be certain of what you are doing. And so we have formed a second intermediate term high right there, because we have a short-term high on the left and it formed a short-term high on the right. We broke the structure, you know, the order flow with a close below. So you could place another entry from this close, because this close confirms the right short-term high, you know, of the pattern, you know, of intermediate term high. So you could trade from there. And you see after that, it went pretty fast below. And so, yeah, this is the pattern. We break fast, retest the breaker, BOS, and then induce people to buy, take the sellers out, and boom. This could be very tricky. So if you were trying to sell from there, let's say, because you could say, wow, this is a breakout structure, we have many fair value gaps, you know, you can make many scenarios. That's why trading from the right place is very important. Always remember that. Wednesday, counter trend but strong inducement. Yeah. So I wanted the price to come there. And you see, we have accumulation of sales, a new range, and we have taken all the internal liquidity on the sell side, but we didn't take the sell side. And for me, this one was to be taken. But since we were in this range selling, I was not sure we would sell from there, you know. I would prefer to wait from a 5-minute breaker that you can see in this area, if you can look on your chart, okay. So the trade, this one, it's not the best trade I would recommend, because it's a snipe trade, okay. But you have this little candle which took the liquidity, we form intermediate term low, boom, and it started to form, you know, the range. And how do you know that this was not the low of the range, or this one? Because here also we took liquidity, etc. Because you must look at something. Here we took the liquidity and we started forming liquidity from there. And up to this point, you know, once we start forming liquidity and boom and BOS and forming liquidity, for me, this is liquidity. All this become liquidity. Even though we take some minor liquidity, you know, you must remember that the starting of the range was there and we formed liquidity there, okay? So all this is liquidity. And why I didn't wait for this candle to be retested? Because you have a fair value gap. I'm sorry, because you can't see it. I didn't zoom enough. so you can see it, but there is a fair value gap on the left and on the right, unmitigated. And this form what I could call a liquidity void, or, strong imbalance, to be filled, because it hasn't been filled here, imbalance, boom, we go straight through it and form another imbalance. So there is two imbalances. And this is very important when it forms just above a candle which took the liquidity. So you have a candle which takes the liquidity, boom. When you have something like this, try to note down somewhere that you must check if there is this kind of pattern, fair value gap on the left, on the right, both unmitigated, and therefore it will come retest this and not the candle, and boom. Okay, we take the stop losses, because why are the stop losses there? Because you have the big 15-minute order block. People are induced to sell in this accumulation of sales. We take the liquidity. Next liquidity target is this one. It was very difficult to enter. You could enter from the breaker, okay, breaker entry, but it was not 20 pips target. Personally, I expected the high of the order block to be taken. That was my plan at first, but you always must book profits when important liquidity is taken. That's why it's very important to book profits, at target areas. And so after that, you had the sell, and it was kind of strange price action here, but you could see, I saw it when I saw this intermediate term high forming, fair value gap, and you could trade from there. Okay, here it accumulated because people are buying from this order block, and boom. After that, it goes straight. Okay, now Thursday, BOS inducement trap. So you see, mainly the bias every day was kind of selling, even though there were some pullbacks. It was always a pullback to sell right after, So Tuesday selling, Wednesday, even though my trade was buy, the bias was sell. Now Thursday, the bias is still sell. And I took screenshots on the 1 minute. So on the 1 minute, you have this range, complex pullback. What bothered me, to be very honest, is that we left equals right there. This week didn't take this, and it really bothered me, So I was kind of not sure that this was not liquidity, like just a trap to go above again and boom, So it was tricky for me to trade this one. So we have made a BOS, okay, inducement, and then the trade was from there. But I didn't catch this one. I remember I didn't take it. I missed this entry because it was also a breaker entry, very tricky, Little weak, because boom, you close below, little weak, and it went down. 9 open, you could say, you could trade from there, but you see the range from low to high, even though my target was below. Like you are trading really from the bottom of the range, and I don't like that. Okay, I really don't like that. And so I don't know why I marked this as the trade of the day, because probably because it was very quick. You see, the 20 pips were very quick. The bias was sell. We induce people to buy. And of course, if you catch the sell from there, it was a very, very nice trade. You know, your day is done by 9:15, you know, very quick. But yeah, if you didn't catch this one, it was more tricky after. And now on Friday, on Thursday, I caught, normally I don't trade the New York session, but I started to mark, to journal the silver bullet trade. I don't know if you have seen the ICT video about silver bullet trades. You know, you must see it because it's a quick video for first time that he does something like this, and very informative. And I backtested it. As you can see, I started to backtest, and sometimes it's tricky, but if you know your bias, your next draw on liquidity, and if the price action is clear, it can be very powerful. However, if it's not clear, it can be tricky. So it's not a magic thing, you know, it's not something magic, but it's something more that you can add. And I will start trading the New York morning session from 10 to 11 on the New York time. So, and Paris time, it is between 4 and 5 p.m. I will just monitor this 1 hour when I have time, and I will try to trade the silver bullet, and I will tell you about it on future videos. So let's come back. Friday tricky trade. I didn't catch this one. It was very tricky for me Friday. I took some losses trying to trade without discipline, because, you know, my bias was sell overall. But when I saw this M pattern, I wanted to buy, but I bought at the wrong place. Not at the wrong place, I would say, but using the 1 minute price action. So I took a loss. And yeah, it was not that difficult because I had the right area for sell. So what was this area? It was, I didn't mark it. It was a very important area on my chart. I marked it, and this was above the previous day high, and this is the previous day low. This was the target for me, but you see the trade happened on the afternoon, just before the news release, and this was the news release, boom, and it continued down. Okay, so of course, if I have waited just for my sell, you know, just above the equals, it would have been pretty easier. But since I'm working at this time, it's not easy to monitor trades, you know. So I have to adapt. I must trade only in the morning before 12, even before 11:30, I would say. And that's it. After, maybe in the afternoon, if I have time, I could try the silver bullet. And I think there was a silver bullet somewhere there to trade. So what was in the morning? There was this, I think I have a screenshot. No. Okay, you have this range, okay, from low to high. Why here and not there? Because this if you look in the 1 minute, forms an intermediate term low, boom, and here it is microstructure. So because this is a pullback, it has not to, to take some external liquidity. The only liquidity it will take is the internal one. So it takes internal liquidity. Of course, it comes and forms new equal lows. That's why I was a little bit stressed about taking a buy, because it forms equal lows. But if you are confident in your direction that it must come, take these equals. So it all comes to confidence, in your strategy, in your plan. And I was not confident on that day because my bias was sell. And even though I wanted this to pull back there, in my mind, I was trading with my mind, and my mind was kind of wrestling, between buy and sell. And this is not good. You must not trade when your mind is like this, It must be effortless, mindless, like I say, trade mindlessly, because it should be clear, You don't need to learn a new strategy. You don't need to learn to get new knowledge. We are trying to accumulate new things, new knowledge, new trick, We are trying to learn new tricks to better our trade, but this is not the answer. You can learn forever during all your life new things and still be inconsistent, unprofitable. The only thing that will make you profitable is to discipline yourself and to trade only when it's clear, Even though the price might be playing, messy, whatever, but you know that your stop loss is clear below this low because this is intermediate term low. This is the scenario. There must be no other scenario in this case. It's pretty clear. When I saw the M forming, for me, firstly, what was clear was that this was liquidity and that we would have a buy setup below this liquidity and the stop loss would be safe right there. Okay. If, of course, the plan is right, but it's normal to be wrong sometimes. But what would be wrong would be your plan. It's not your entry, it's not your discipline or whatever. It's your plan which is wrong. And your plan, when it is wrong, it shouldn't cost you much, You shouldn't be losing many trades because you cannot have like 20 plans, You can have 20 entries, 20 wrong entries, but you cannot have 20 plans on the same session, So you might have the wrong bias. Let's say you want to sell, you take your stop loss. Okay, it took your stop loss, you wait for there and you sell right after, no problem. Or you can buy from there, okay? Many times I have changed my bias, It's okay. So this is the 5-minute time frame, And on the 5-minute, you see, if you just traded below this liquidity, it was less than 5 pips stop loss. So if you want to be serene, you just put your trade there, stop loss there, and you wait. You put, of course, an alert right there for taking some profits. It's not much, but it's like maybe less than 15 pips. But at least you can put your trade at break even and then you monitor. Okay. And look at how this beautiful fair value gap creating the displacement. You could trade from there up to the area. Okay. And boom. So yeah, you see, Friday could be an easy day, but if you do not respect the discipline, if you trade forcing with your mind on the 1 minute, it was tricky, you know, inside. Very tricky. You could take many losses. As you can see, here we have kind of break of structure. You can try to trade somewhere there, boom, stop loss. Okay. There was kind of price action. You want to trade, boom, they could take your stop loss, comes there and go straight. So when it's like this, you know, go effortless. Really go effortless. Do not try to just catch a trade just to reduce your stop, you know, to increase your RR and all this, because you will lose much more than you will gain, you know. And so, yeah, that's it. Thanks for watching and see you next week. Trade safe, trade mindlessly.